These three levels can drastically improve your trading. So these three levels are going to be important levels to have on your guys' charts. I've noticed a lot of people don't use them, and I feel like if you implement them into your charts, they can be very, very helpful for you guys to have levels on your charts to play off of these levels. So I thought I would put together this video helping you guys identify these levels to watch. Now, what are they? So they're the prior day high, they are the prior day low, and then they are the prior day close. All three of these levels into the following day session hold their relevance the next day. So if this happened on, say, Monday, then we would be watching these levels then on Tuesday the following day, because that Monday it would have been, or that Tuesday it would have been the prior day high, prior day low, and then the prior day close. Why should you use them? Oftentimes, they're the key levels on the following day of the stock. So anytime you're looking at the prior day high, also referred to as the PDH, it acts as a support below it. So anytime you have that prior day low or that prior day high, so let's say this is the PDH right here, prior day high, and you have a stock that is above it going like this, trading like this, oftentimes this is a great entry spot off of that prior day high, excuse me. Same thing goes with if we're below it. So if we're trading below it, trading below it, trading below it, oftentimes it's a really good reject spot to eye puts on that rejection. When you're talking about the prior day low, same theory, except we're looking at the previous day's low instead of the previous day's high. Prior day close is one of the best levels that you guys can use, and it is one of the most important levels to put on your chart. It's basically, if you think of it, the prior day close, whatever the price closed at the previous day, that is what the price that the market agreed on was a fair value price. It's kind of important because you get a lot of those people that are longing into the open, and they're either going to be in the profit or red based on that level alone because they're buying into the close. It is a great spot to enter long off of in a strong stock. So let's say we're coming up here, coming up here, coming up here, and then we have that prior day close right here. If we get a nice pullback here, a nice entry off of that level to keep on watch. You will see this in a few examples that we will show from today's session of how these levels played out. It is the same thing with shorting weak names. So if you get a name that comes in here, comes into this PDC and then rejects like this, a good long or a good short with your risk level right here. So key level for you guys to keep on watch. Let's go into some examples here. The first one is going to be Amazon. So simply how you draw the prior day close and the prior day high, you look at the previous day's session, here was that high, here was that low, and then you can see Amazon closed right here at this 142.74 area. What happened here today? Well, look at how we come back down and where did we reject? Right into that prior day close area. So we get that breakdown, and remember it acts as that resistance when we are trading below it. Trades below it, and then you get that nice price movement to the downside with a clearly defined risk level of that being right here at this candle high right here on that 2 minute. So that's your risk level. If you're playing that prior day close reject, nice rejection move back to the downside here. Very, very nice setup here on Amazon weakness where you get that bounce, you get that rejection, and nice volume to accompany it. What about Apple? Let's take a look at Apple. Prime example of a prior day close hold here. So let's go in here and a prior day high hold. So you can see this previous day high right here at 142 or 182.44. Look where Apple bounced today. Bounce, bounce. What happens? Bounce here. What happens when we're below? Rejection. Bounce right here into this prior day high, rejection, and nice move to the downside. Where did we hold? That previous day's close. So you guys can see how important these levels are to at least have mapped out on your chart to watch, to trade off of. So 1, 2, 3, then we come back, reclaim, reject, and push down into that previous day close. And the last one here that I wanted to show is Microsoft. How fitting. Where do we bounce? Right at the previous day close. Almost to the cent is where we hit. right into that previous day close. It had a 2-cent drawdown off of this level. So having these levels mapped out is super, super, super important. Same thing with where's the previous day high? 362.33. Bounce, bounce, reject, 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 and then turns into support when you are trading above it and into that price level right now. So prime example here of prior day close, prior day high, and prior day low. I would recommend implementing these levels into your guys' trades or into the stocks you're watching, as you will notice these levels hold a lot of the time. Hope this video helps. Leave a comment down below if you have any questions or comments. Thank you.